Hey, what is up, everybody? This is Jesse with Keeping It Real Finance, channel that always has your back and tells it like it is. Well, in today's video, the question we're asking is, can Bitcoin go to $1 million within 90 days? So that may sound absolutely insane on the surface, but this account here, Balaji, is the one who is kind of brought this to the forefront. Now, what this all stems from is the most recent banking collapses of Silicon Valley Bank as well as Signature Bank. Essentially, what has transpired is that as the Fed has continued to raise interest rates, it's basically caused banks with a large portfolio of treasury bonds to have their portfolio plummet in value. Now, as that has happened, what then in turn it's caused is essentially they do not have enough from depositors to cover their liabilities, right? So in other words, the banks have borrowed way more than they could ever offset, and they're all kind of built this way. And so basically the whole system is kind of like a house of cards where somebody has basically just pulled one of the bottom cards out, right? So that's what's going on. Now, going to Balaji's bet is kind of where this whole thing stems. And just before I get into that, I did want to share who Balaji is. So until the last couple of days, I had never even heard of Balaji, I'll be honest with you. But this is Balaji right here. This is his Twitter account where it says immutable money, infinite frontier, eternal life, Bitcoin, right? So I figured I would take a look and see, well, who is Balaji? So in case you're wondering, Balaji is the guy right here in the middle next to Brian Armstrong here at Coinbase. He is the former Coinbase Chief Technology Officer. He is also a angel investor. And then you can see right here in this little description, he's also a former general partner at the venture capital firm Andreessen Horowitz. He is 42, okay? So he's making a bet here with this guy, James Medlock. Now, the funny thing is Medlock's kind of the other side of the equation, right? So tax enthusiast, hyperinflation doubter. So that's the one kind of aimed at Balaji, right? Now, the bet here. So he says, just moving money for the bet. We can do it via smart contract, but for simplicity, old-fashioned escrow may work. The escrow person would need one Bitcoin address, one Ethereum address for USDC. The assets would sit on chain for 90 days. So this is the 90-day bet, right? So he says if Bitcoin is less than 1 million in 90 days after escrow, then you win and get both the Bitcoin and the 1 million USDC. If Bitcoin is greater than 1 million USD in 90 days after escrow, then I win and get both the 1 BTC and now worthless 1 million USDC. Okay. So if I then go to Balaji's Twitter feed, and this is it right here, he's got all kinds of things in here that he's posted, basically all kinds of charts and whatnot. Here's some of it. And I kind of want to just scroll through his feed a little bit to kind of give you a good take on everything that Balaji's talking about. Essentially what he's getting at is that basically because of these Fed rate hikes, it's going to lead to a hyperinflation here in the US, something that you would see a la Argentina, right? And if that were to occur, he thinks the whole system could basically go down in flames. It would happen quickly. And with that, you would want to have your assets in something like Bitcoin that's actually going to hold its value as opposed to the US dollar, which is plummeting in value, right? So here's a post right here from this Bianco Research balance sheet. So these loans are newly printed money or a form of quantitative easing. They increase the Fed's balance sheet by 300 billion. In other words, in just 1 week, the Fed reversed roughly half of all the QT it had accomplished over the past year, right? So straight up in terms of money printing. Not good, right? Let's see here. The Fed made 100 plus banks insolvent. Monday we'll see huge withdrawals, but moving to big banks is a trap. Trillions will be printed and you will be diluted. You need an asset that can be seized. Bitcoin is the only global safe haven. So at the time of Silicon Valley Bank's collapse, that is the second largest bank collapse ever in the US, followed by the third, which was Signature Bank. Balaji is saying that those increases in rates is leading to that plummeting treasury bond. And therefore, he's saying over 100 banks essentially that do not have enough in deposits to cover those liabilities, right? So if we kind of scroll on up from there, every post is really similar to this. And you can kind of see, the point that he's getting at really quick, like, the right to buy, sell, send, and receive Bitcoin shall not be infringed. This is already part of Texas GOP's official platform. Other states can copy this language. They're finally admitting it's a banking crisis that was caused by the Fed's rate hikes, not tech. That there are 100 plus insolvent banks, not one. That this is already beyond 2008 in key ways, and that printing is going literally vertical. So he shared this right here. So discount window borrowing reaches all-time high. Bank usage of Fed's backstop surpassed 2008 crisis level, right straight to the moon. And, in this part of it kind of goes back to also like the FDIC, right? So I was reading the other day how the FDIC has something like 1.25 billion in reserves and basically over $2 trillion essentially in liabilities that it would never be able to cover in a million years. So, the FDIC insurance is up to $250,000 per each investor. But what happens if you're a large company? If you're a big time investor and you've got more than that in the bank, right? What happens with you? Well, so far, the Biden administration has come out and said, well, hey, we're going to cover everybody for all of your deposits into the bank. That's not sustainable in the slightest, okay? So he says here, essentially, and I kind of like this, he refers to this as like the bit signal. The clearest way to see what's happening, they decided to monetize the debt, right? It's the messiest way possible by printing 150 billion for insolvent banks to cover an orgy of bank runs. The dollar supply is now going vertical, and so is the demand for Bitcoin, right? So it's just really interesting seeing how all this is unfolding. Here's his really good post, though, by the way. Let me share this one also. So the banks are insolvent. We should have learned to distrust bankers after the 2008 crisis. I tend to agree, right? But, I think the problem with Bitcoin that everybody comes back to is, if everything worked in Bitcoin, I think everybody would operate on Bitcoin, right? But it takes time to get there. But so we obviously Bitcoin came out 2009. But back then they used complex language to hide the simple fact that mortgages were bad. And today they do it to hide the fact that the money is gone, not in one bank, in all the banks. That's kind of a scary thought if you think about it, right? Now, I had responded to a poster on Twitter about this, about the 2008 crisis, that essentially it was derivatives, right? Derivatives of mortgage-backed securities. And they kind of like sliced one derivative to another derivative to another derivative to the point that no one actually knew what you owned or if it had any value. And then the whole thing collapsed, right? And he's saying that now we're doing the same thing where none of these banks truly have any money. And so when the Fed's raising these hikes and their bonds become worthless, now one of the things why SVB was went under was they were basically had all their eggs in one basket, this treasury basket. Everything was in there. They didn't have it hedged on anything else. And a lot of people brought that up, right? So I don't know if it's fair to say that every bank is exactly like SVB. That's probably not true. But in terms of, the charts here, basically, it doesn't look good. It really doesn't look good. If we keep on scrolling up here, let's see, we got some more from him. Many fiat banks are dead. Many more are going to die. You kind of get the theme here with Balaji, right? He is not a fan of the Fed, of the US dollar. And I got to admit, I had posted a video of Janet Yellen talking in one of these committees on Capitol Hill, and it didn't give me any confidence whatsoever that they know what they're doing, right? So, really the problem here probably goes back to the dollar not being based on gold. So when they took the dollar off the gold standard, what is the dollar now based on, right? I mean, that's a really good question. And it's kind of like it's based on whatever you want it to be based on, which is exactly what the federal government's doing. So they're saying, hey, there's still plenty of value here in the dollar. However, it's not based on gold. And the argument now for Bitcoin essentially is that Bitcoin is like the new gold, right? Now, I thought this was an interesting take here from Hunter Horsley. So, what if buying crypto ends up not having been a way to make money, but rather a way to avoid losing it, right? That's kind of a wild thought if you think about it. And here's the chart that he was referencing. So, Balaji says, imagine this graph, but in fast forward. That's what happens when people exit a failing fiat currency and enter gold. In this case, they'll exit the dollar and enter digital gold. The bet isn't a way to make money. It's a way to alert innocent dollar holders, get to Bitcoin. So, the thing with Bitcoin is a decentralized, peer-to-peer way to send value from one person to another, right? It holds its value. Bitcoin is capped at 21 million coins. There's less than that. They're in supply. I want to say only another 800,000 or so is all that will ever be mined. The mining is halved every 4 years. It's treated like a commodity. Even the SEC cannot stop Bitcoin. Now, what the SEC can do is go after the exchanges. Okay, the exchanges are where all the problems have been in crypto, right? And all of their equally risky lending that has led to sort of the black eye of crypto. But at the moment, now the banking sector is getting the black eye, right? With Bitcoin, it comes down to, can you use it as a true world currency, right? Will governments even allow that to happen? I mean, think of the U.S. government, how much value is in the dollar. The reality, though, is the genie may be out of the bottle. They probably can't stop it at this point. It's going to do what it's going to do. And, ironically, Bitcoin was created after the 2008 mortgage crisis. And here we are now, 2023, 15 years later, with a banking crisis. Okay. And we've got an inflation problem, wages, they're not keeping up with inflation. The value of the dollar is basically just, plummeting. And I know you had a post here. Let me see if I can find it. If I scroll up, here it is. So $1's worth, right? So the Federal Reserve Act creates a central bank with the ability to manage the country's money supply. Right? This is roughly what it was worth in 1913. $1 had the buying power of $26 today. You can see the long-term trend here. I mean, it's pretty obvious, right? So the buying power of the dollar is going to be less and less and less over time, whereas something like Bitcoin is going to hold its value. You put your money in that, you're going to maintain your value. And that's where Balaji was saying in his bet that he thinks hyperinflation has just started. He thinks it's going to happen over the next 3 months. And if indeed he's right, then the money in Bitcoin will be worth far more, essentially, than the money in the USDC and in the dollars, right? So, really interesting bet. Now, the flip side of this is Balaji is also a Bitcoin guy, Bitcoin maxi, and that's fine. The interesting thing that I've kind of realized following crypto is that I can see why the Bitcoin maxis are Bitcoin maxis. I get it, right? I think the overall long-term trend in the dollar is obvious, and I think the long-term trend in Bitcoin is kind of the opposite. It's going to be going up as the dollar goes down. That is true. Now, the question for today's video is this going to happen within 90 days? And I don't know. Really, if you think about it, if he's saying 100 banks could go down in flames, right? If we have 2 banks going under and the FDIC is can cover them, let's say, is more than covering them. It's going above and beyond the 250,000. Could it cover these other banks? I don't know. What has been rumored as the triggered cause for Silicon Valley Bank was Peter Thiel and his investor group pulling all their funds, right? So they got nervous, told everybody on the call, hey, pull your funds. They pulled them all, and then the bank went down in flames. What if other large investors for other banks did the same thing? Would those banks all go down in flames? I would argue that they probably would, because again, we know that the banks do not have the reserves. And this is what's, again, kind of ironic with this whole crypto thing. CZ had brought it up that back in December, Binance weathered a bank run of $10 billion one day, 10 billion with a B. That's a lot. That's a ton of money, right? But they didn't even blink an eye, bat an eyelash. They had somewhere in the ballpark of roughly 60 billion in reserve. Now, our banking system here in the US is nowhere near that, right? Now, I would argue that if you have assets, and let's say that that's at 100% value, that you should only be able to loan out up to 50% of that value, because now you still have 50 in the reserve and you have 50 out, your 1-to-1 ratio, right? But our banking system is nothing like that. They're loaning out 95, 98%, whatever, an extreme amount, well beyond anything that's sustainable. And the reason why is because the Fed has their back, or do they, right? That's the question that we're getting at in today's video. Does the Fed have your back, or do they? Or are the actions of the Fed tearing down the system that they're trying to save? Is it a runaway freight train that you can't save it at this point? Should smart money go into something that retains value like Bitcoin, right? Where the risk is at in Bitcoin, as I've said before, is with the exchange. You think of like Celsius, you think of Voyager. Where was the risk? Well, the risk was the exchange using your funds to try and gain market share, basically through a risky investment, right? But if you had Bitcoin and you held it off exchange in cold wallet, well, where's your risk? Well, in that case, the risk is essentially on you and the cold wallet. It's in one central location, right? I would argue, it'd probably make more sense to have a decentralized wallet. Could that still be hacked? I've seen that happen as well. But the odds are smaller, right? And so ultimately, you are kind of coming back to a question of, are you doing it to make money or retain your money, right? Retain the value. And I think maybe that's what it is more than anything, is that as this inflation increases, which really, this potential for hyperinflation, how are you going to retain your value, right? Now, one thing that I've also learned in this latest run here with 2022 and what a down year it was, one of the things I've learned in particular with that is that, Bitcoin has the ability to be a store of value, right? But is it the best inflation hedge? I don't know. Okay. Now, one thing that I kind of learned through this last cycle essentially was that real estate, by all accounts, is the true inflation hedge, right? But you cannot always sink small amounts of money into real estate and then have them liquid to be back. You need to have liquid money somewhere, right? And that's the problem with real estate, is you put it in real estate and then it's kind of like stuck, right? Even if you put it in something like a fund, like a Fundrise, for example, an REIT, basically a small way to buy real estate. You're putting it in there, and in a way, it's stuck. It's not liquid. You can't get it back right away. But real estate was a fantastic inflation hedge, especially all through 2022. Now, at the moment, real estate is going to be going down in value because the rates keep going higher, right, with all these rate hikes. And so again, you kind of come back to something like a Bitcoin, that if you could have it liquid as well as store your value, that would be the best, right? Now, in order to have liquid, though, you have to move it back to an exchange, okay? And the kicker in that is that every time you sell it, that's a taxable event here in the US because of our laws that aren't up to date with something like this, right? Which is a problem. Okay. But would you retain your value? Maybe. Now, the question is all of this going to happen within 90 days? So it's mid-March right now. It's March 20th. So, we got April, May, June. So mid-June, Balaji is saying over 100 banks are basically going to go insolvent. And if that happens, will that lead to hyperinflation? Good question. In the 2008 crisis, there were numerous banks that were going insolvent. And I would argue that on a daily basis, banks go insolvent, right? That doesn't necessarily mean there's going to be hyperinflation. Usually what happens is somebody comes along and buys the bank's assets. I guess the kicker here, more so the catch, is if it all happens at once. So like he said, he thinks it's going to happen immediately. It's going to be like falling off a cliff, basically. Like we've steadily been building up speed, and at some point we're just going to go right over the side. He thinks that's happening within now to the next 90 days. So for crypto, what it means is that this is definitely a trigger, a catalyst for that next big bull run, right? Bitcoin always runs first. The alts end up following as money flows out of Bitcoin later, and you have that mythical altcoin season, right? Where we're at in the Bitcoin cycle, though, typically this is a year of almost sideways movement, positive, but fairly sideways movement. So to say that this is the year that it explodes would not follow historical context for Bitcoin. Okay, could it happen though? Yes, it could, because look at what's transpired so far with SVB, right? So it could happen. It's possible. Will it happen? I don't know. I've always kind of thought that, and I've said it numerous times on this channel, that I thought the market would start heating up in the summertime. Okay. Now, ironically, that would kind of line up with this, that it would heat up in the summertime. The kicker, though, is that, the US dollar could be worth less and less and less as they continue to just, print away, right? And we continue to raise rates to try and offset inflation. And, the middle class can't afford to buy. That's a problem, right? I can see different sides of this argument. I think, one thing that maybe Balaji underestimates a little bit is the power of the U.S. government to do whatever they want when they want to. I think that's also in play here. So I'm not so certain if Bitcoin was a runaway train, best thing you could ever possibly buy, if the U.S. government would just let that happen and let the dollar go down in flames. I don't see that, right? But it could be that the Fed is taking actions to improve the situation and steadily makes it worse and worse and worse, which is obvious when you look at this chart, right? So ultimately, for the scope of this video and the scope of kind of why I wanted to share today, does Balaji have a point? I definitely think he has a point, right? Does he have historical context and data to support his view? Definitely. He definitely has a point there. As the dollar trends down, Bitcoin will trend up. Ultimately, is Bitcoin the answer? Maybe. It might be. There's a lot of things with Bitcoin that you can kind of see where it could truly be the answer to deflating currencies, right? Now, ironically, there are other currencies out there that do kind of like a similar thing here that hold value. I remember I think I covered a long time ago Reserve. Reserve was one that was trying to be a cryptocurrency in hyperinflating markets all around the world, right? The Argentinas, the Venezuelas, where else were they? Maybe Bolivia, a few different countries like that. So there was a solution out there. Now, Bitcoin is kind of the main solution, right? The nice thing with Bitcoin that's different from the alts, and this is another thing that the SEC tries to look at, is that there really is no one person or body in charge of it. It's just kind of out there doing its thing, right? There's not like a company that has the rights to Bitcoin that is then, kind of influencing Bitcoin's future. You really don't have that. So Bitcoin is simply out there. I do think that as time goes on, it will increase in value. Whether we see hyperinflation in the next 90 days, to be determined. It really kind of comes down to can the Fed, can the regulators, can the president, can anybody put the market at ease, right? I mean, that's really kind of what it comes down to. If the market's at ease, then no, it's not going to happen. But if the market is churned up, if people are getting more and more nervous, thinking, hey, maybe I need to pull all my money, you see these lines at the bank, then where are they going to put that value? Why would you hold USD? Like I've been saying all along, you get a lot of senior citizens, elderly, that have large cash accounts, like savings accounts. They're just plummeting in value every day, right? So where do they retain their value? Well, they would retain value if, one, they bought real estate, or two, they bought Bitcoin. So either one of those things, real estate or Bitcoin, as a hedge against inflation, makes sense. Now, Bitcoin probably makes sense for the liquid aspect of it. If you don't need liquid cash, then you could go the real estate route, right? So can it happen by the summertime? Hyperinflation, Balaji's bet, right? Ultimately, Balaji's bet. What do you think? What are the odds that he wins the bet? Leave it in the comments what you think. It would be crazy. It would be absolutely crazy for the U.S. to turn into like Argentina. So that hasn't happened yet. And I don't know if it necessarily will. That would be out of character. Let's put it that way. That would be out of character for the U.S. to turn into the next Argentina. However, if you look at the policies and you can see how they're affecting the U.S. to its detriment, then maybe it could happen regardless, right? So I'd like to see what you all think on that. Where I lean on this thing is I lean towards, I think the U.S. government would change the game, I think is what I'm trying to say. I think they would change the game before they allow the U.S. to turn into the next Argentina. Based on the current rules of the game, Balaji has a point, right? That could their rate hikes cause these treasury bills to go down in value and more banks to be insolvent? Absolutely. Will they get gobbled up by larger banks? Absolutely. Will we then have banks that are too big to fail? We already do. We'll just have more, right? Or maybe they'll just get even bigger. It kind of reminds me, back when I was in high school, I was in a environmental science class, and we went out one day and fished through a stream and got a bunch of little minnows, right? And we brought all the minnows back, put them in the tank, and started feeding them daily or whatever. This was like the beginning of the year. Well, by the end of the year, people had forgot to feed the minnows, and guess what? There was like 3 really big ones in there. All the rest were gone, right? And that's exactly what could happen to the banking system. And so I think I'm leaning towards, I think the U.S. government would change the game before they lose, is what I think I'm saying here. So let me know where you all stand. I'd like to hear it, and we can, take the conversation from there. All right. So if you enjoyed today's video, as always, make sure to hit the like button. Don't forget that I'm also on Twitter, where I am right here at KIR Finance, where you can find me tweeting and retweeting. So check me out there. And make sure to click the QR code. You can go to my website, check my financial blog. Maybe I'll do a piece on this in the financial blog. I haven't updated that in a little bit. And then lastly, for a friendly reminder, this is Jesse with Keeping It Real Finance, channel that always has your back, tells it like it is, and covers the news, right? Especially this one. Couldn't let this one escape. I will see you on the next one. Later.